Tesla. So good morning for the YouTube followers. Good morning, Rezo, Claudio. Good morning, Vin, Mick. Morning, traders. All right, so I wanted to put out this morning a few concepts and about the FOMC day. Generally, when I have an FOMC day, and it's going to be at 2 o'clock today, I'm not really pushing into any kind of trading with size. This is because everybody today expects a move. We had over here some forecast about the 25 points and so on. But what I want to do and tell you is that I always wait for 2 p.m. and then prepare for that market. So prepare my levels. The major stocks that I'm usually trading are Tesla, Meta, Amazon, Google, Microsoft, Nvidia, could be Baba, and a few other big caps. I like when there's high liquidity, and also I like those stocks where I can find options to trade with very low spread and high liquidity. I cannot trade anything that has high spread, okay, and that has no liquidity. So you will always see me trading options that are super liquid. Over here, I post over here some rules. More you will find in the trading room, but the simple rules that I use for options. First of all, don't bring option to expiration. Generally, this is the first suggestion that I tell you. Trade option for beginners as you would trade underlying stocks. So buy calls when you're thinking the stock will rise and you are thinking stock to go down, so you buy puts. Buy option when have low implied volatility. So if you need to stop out, you won't have a bad fill. It is like buying on a dip. And this is why I never look to buy options, let's say on Tesla, which has very good options, low risk, in the sense that it has low spread, high liquid, so you can get out whenever you want. I never look to buy these, for example, on a breakout, okay? I always look to buy these on a dip. Could be a morning dip, could be a pullback dip. This is because this ensures me the lowest risk possible. Good morning, Morgan. We want tight spread so that we can get out without losing too much. Essentially, sometimes you'll see options, especially the illiquid ones. You enter and you will have 20, 25 right away cents of spread. So right away, as soon as you enter, you're like down 25 cents. I don't want to trade those kind of options. So you'll never see me trade options which are illiquid. I'm only going to trade options that are super liquid. And again, as I said, low spread. Some traders asked me in the last week from Bookmap, they asked me if I could cover a few things about the delta. What I think about the delta, are those important for me or not? Well, I believe that you need to know everything about the delta over here. So delta, theta, gamma, we call them Greeks, okay? And what is the delta? The delta is how much premium changes with the move of $1 of the underlying stock. So the bigger the delta, the best for our pockets, in the sense that you will get paid more. Delta of 0.81 means that for each $1 move of the underlying stock, the option will move 81 cents. This is also a double sword because in the same way, if your stock loses $1, our option will lose 81 cents. Okay? Next one, keep always in control of the time decay, as when a stock is lateral and we are near expiration, especially out of the money, our option will lose more premium, price value, which is a higher gamma. So when we're getting closer to expiration of our contract, the curve of our premium will start to decline faster, resulting in losing more. The next thing is, if an option call has price of 411 bid and 418 ask, which this is a good spread, 7 cents. We want to buy an option with low implied volatility. It is much better as we can take advantage of the possible volatility surge with the move of the stock in our favor. If we buy a $411 option call, means we are spending $411 per the underlying 100 shares. So a $411 investments. if you trade right now, I don't know, Tesla, of course, Tesla, Meta, Amazon, being that had this split in the last years, you'll pay option much cheaper than what you paid before. Some traders prefer like this, so lower spread, some traders no. Delta instead, over here, will move from 0 to 1 for calls and 0 to -1 for puts. The more in the money, the higher the delta. The more out of the money, OTM, sorry, not OMT, OTM, the lower the delta. Gamma, so another Greek, is how much delta will move with $1 move on the line stock. Theta, the last one that we are going to cover right now, is how much we lose each day in premium from time decay. As you know, I believe that almost everybody knows this. When the stock, let's say, it moves in our favor, okay? Let's say this morning we bought over here at the open Tesla, and the stock does this, okay? So we'll have our option that, let's say, an underlying stock gave us 1% of move. We'll have our option that maybe goes up like 30%, 20%. Now, where is the difficult part over here? This we can remove. Clear this drawing, so edit, remove, edit, and remove. If instead we will have a pullback, okay, with the stock, that option will suffer much more versus the underlying stock. And if the price of the stock, let's say, will remain lateral, okay, the more we get into expiration, so let's say we trade a weekly option, the more the curve of our option will decline, so we'll lose more premium. Essentially, what is the point? Is that in a consolidation, in a sideways action, if you buy, let's say, Tesla at 260 and it stays 260, of course, you have the same price, okay, that you paid. But in the option land, it's different. If the price in 2 hours stays from 260 to 260, your option will probably go, let's say, from 2.11 to 1.80. So it will lose premium. The last thing, and this I wanted to cover, buying option over earnings will put you at the risk of buying high implied volatility. Wait the day after we have a dip. Now, this is true and not only true, because there are a lot of traders that trade, okay, there are a lot of traders that trade lotto options or lotto calls. What are these? Thank you, trader. I will put over here volume. Okay. So what are the lotto calls? Okay, so for who's joined Discord, we've been talking the last 10 minutes about options. So the main Greeks, implied volatility, time decay, if it's good or not to buy options when we have earning and so on. And we're saying right now that buying options in a sideways action market is won't pay you. And over here, buying option over earnings will put you at high risk of buying a high implied volatility. Wait the day after, then we have a dip. Of course, you buy, like yesterday, Google, all right? We got Google had a major gap for the earnings, so earnings beat. Of course, today you will have, like, you know, a pretty good profit with options. But also you have to understand that those type of options that a lot of traders do like that, there are out of the money, and there are like lotto options, really like a lotto, like you bet your money, all right? So there are many ways to treat them. Now, this morning over here, in the meantime, our beer came. This morning we had a few movers. ES and NQ, they were pretty lateral. Sideways action, and I don't really like to trade a lot of sideways action. So we had a few trades pre-market on that. I prefer to stay away from the sideways action. We had over here NQ. You can see that we're sideways. And I believe that the major move will come after 2 p.m., so after FOMC. So days like this, I don't simply trade them. We had a trade this morning on NQ, was essentially break even. We had a trade this morning on ES over here. It was a good gain. This pre-market short. We took over here a pre-market short. And then over here to the traders in the room, they were trying to trade this. I said, traders, why to trade something like this? We are moving like in 5 points range. There's no direction and we're stuck. So there's no point for me in trading something that is ranging, okay? Now over here you can see my 50-minute chart. And of course we're gonna dig first on ES and then we're gonna go on the big caps. Let's go over here and put our levels. Symbol name if you want to see it over here. Then what I do over here is I put New York and session electronic trading or not regular trading hours. I like to have also over here the pre-market after hours. I'll just contact for changes if you want. Okay. So these are some of the levels that I keep on ES right now. I start from a weekly, daily, 4-hour, 1 hour, 15 minutes, and so on. But this is what I use 15 minutes to see the major levels that I'm trading right now. So we had this morning this peak. So right now we're going to put this level here. And we had this morning this major dip. So this is our range. Yes, move from 45.84 to 45.92, like 7-8 points, which is nothing. All right, so we have to wait over here. So what I'm going to do for the FOMC, 10 minutes before the FOMC, which is 2 p.m., and that was my essentially 8 p.m., I will prepare again my levels. I will look at Tesla, I will look at Nvidia, I will look at Meta, I will look at Amazon. Remember also we have also earnings. And then I will look at ES and I will look at NQ. I will put my levels and I will prepare my plan. Plan that is very simple often. So I will look, let's say, for a bearish, okay? So for a bear, this kind of plan, so we'll look for a fill and rejection. Or the second plan will be looking for a test or a breakdown, so a bear trap, and then looking for a major long. Same for the other level that we have over here. So I'm preparing my mind to recognize different scenarios before this happen. Because it's very easy, to explain or call something that already happened, but is, I would say, harder, and it requires a lot more experience to try to forecast what is going to happen based on what you've been seeing in the last weeks, months, or years. What is an example? This morning we were, I'm going to put over here an example of this. Okay. So this morning we were, first of all, recording a session. We were in the room, for example, looking at a small cap. This is 811. And I stated AULT 84% fader from a forecast that I made. 470 is the level to trade for a series of reasons, okay? Some juice I will leave it, some secret sauce I will leave it for traders in the room. But then we start seeing over here the setup forming. You can see one of the traders over here getting a little bit early and then start trading. Small size, but that's how some traders trade pre-market, and it's fine. Other traders over here getting the same setup. So short over here, the top over on the 470 and came. So we alerted this at 8:11. Okay, so 4 minutes before the top. And this because we know the setup we're going to trade. We wait for that, let's say, level and confirmation of different factors. For example, level, pattern, and order flow with Bookmap. We take the trade. We know exactly what our levels will be for targets and stops. And this is how we like to trade, okay? This is just an example from a small trade this morning. So after this, I moved to, my, say, major stocks. One is Tesla. This morning we had also Google, and I prefer to go review Google with you guys. By the way, anybody traded this? So Google, we had earnings last night. When I say last night, means afternoon traders, okay? 4 p.m. New York time, for me is 10 p.m. my time. So you can see over here with earnings. I want to first go into we're going to put over here a 4-hour chart. Okay, 4-hour chart, let's reduce over here the amount of these. I don't really like these, all these, okay. And then we're going to also cover Bookmap, all right? So Greg traded Google. How was, buddy? I think you shared also a chart if I remember. Oh, was a good profit for you. Okay, I see you lost like 1 hour on the long, but you took like maybe 10 hour on the short. Good. Good. Okay, so let's review a few things. The trend over here is bullish. How do I know this? Well, just need to look over here. It's a very simple cross, everything for the upside, okay? And I'm going to explain you also how to use lotto calls. Not that you have to do it, but it's just like a way that some traders do it. For example, one of the mentors that I had, Smash the Bid, he liked a lot to trade lotto plays, okay? Lotto calls. So over here we have the earnings, okay? Earnings after hour, 4 p.m. New York time. We can see over here that the trend is bullish. All right, so we have a bullish trend. We have several over here bull flag breakouts. And what consists a lotto play? So let's say the price over here is 122 at this point, okay? We're talking about 1 hour, 30 minutes before the before the end of day. And you know that at 4 o'clock, we're gonna have those earnings. So simply buying out of the money calls. And how we buy them? Well, we have a major previous resistance over here, 130, this area over here. Okay, so this is a major catalyst, 130, whole round dollar number, previous high. Of course, if this will push the upside, that is a good level to take profit. In that case, you buy before, so you're gonna buy, let's say at 3 p.m., 3:30, some of your calls, and you will look for that. But you have to be able to risk, because either way, this can go to the downside. The other way instead is what I prefer. So what I do is buying simply the underlying stock, which for me is less riskier. I can cut them when it's like 405, 410, 420, which is like my 10.05 and 10.20. I simply stop out if the trade is not working. I start buying over here my position. Before the earning comes, I place my stop at a relative low, and I always measure traders what the risk reward ratio. So this is something that you have to do. So if I'm risking, for example, for my entry over here, a 3%, of course, I need to look for a potential return of 2R. So over here, for example, I would be looking for that 6%, okay? So I'm gonna lose 1 hour over here, and I'm gonna make 2. Now, sometimes you won't have those 2R. Sometimes you'll have 3 or 4 or 5. But sometimes also you're gonna get stopped out. But this is the way I do it when I'm trading that. If I'm able also to take a fill when we have the play, that's even much better, because I can add size to the play that I like. So this is exactly what I'll be doing when FOMC today will come out. Or we have, I think we have Meta, right? Meta earnings today. Yes, Meta earnings today at 4 o'clock. Okay. So, and after we'll analyze Google using Bookmap. But I think that this explanation about how to look for news, how to look for FOMC or earnings is what really interests you right now. Major level over here of demand, Okay, it lasts over here 2 days, from the 24th all the 25th. So when we have the dip, this is a 5-minute chart, but you can use, 5 minutes, 10 minutes, 15 minutes, 3 minutes, whatever you prefer. Once we have over here the open, you see this is the open, 4 o'clock. We have a major breakdown. So this is flushes all the way down. And we see that it holds this demand zone, right? You're not shorting over here because you're not shorting into a level of demand. You need to see a fail and then a rejection. Over here we make a wick to the downside, and then right away we start pushing strong. So this becomes your long entry. So if you don't have, let's say, an entry like we were saying before, placed at 3:30 just before the earnings, this is a very good level where to trade. This is super fast, so you have to be quick to enter. And if this fails, let's say it pushes to this high and fails, you have to be ready to stop out very quick. What I suggest, do some experience, okay? And this means try to retrade it. There are, apps that you can have, but try to retrade it to become good. These are my best plays because in about really few minutes, 10, 15 minutes of work, you can make more than, in a whole week. Of course, remember, you have to be quick. And this is something that I teach to traders who join my mentoring. So sometimes we do these together so that they can practice how to trade these. Now this morning, I had a plan over here, and I was saying I'll be looking for or buying dips if we hold this 129, 129.50, or I'm looking to short if we're going to have the pre-market high and a fake out. Essentially, Google didn't move much. Look over here. This is Google this morning. In Tesla today, we had the V pattern. We explained last time what was a V pattern. Over here, instead, we had a reverse V pattern. What do I mean by that? So instead of dipping and having this reversal, we had a different setup. So let's cancel now this over here. Okay, we had this different setup. We had the first push and then a fail. The first thing you have to do when you come to the, let's say, to the open, is trace that open level. That is your level where it will really differentiate between demand, buyers in control, and supply, sellers in control. And over here we see that with dips, it start pushing, making higher lows, right? Until this point. At this point we have a high, making a lower high, and we reject one time, second time a big heat map. So it's not that it fails and simply dies, but it fails and they still try to push it. But at this point, and you have to be quick to do this, you have to recognize that over here it cannot push, and we have sellers joining in. They're joining in. They're trying again to bounce it back up. So buyers over here are coming back. But again, what we have this supply. These are orders, limit orders set on the market, okay? Then they want to get filled at 131. Price doesn't even reach there, and it starts like fading. So when you trace your level of relative low, relative high, relative low, this is the point exactly here where you have this breakdown. And this is your reversal V pattern or reverse V pattern. That is your fail. Now, all of this is very easy to understand when something had happened, and I understand that. But my suggestion is the more you track this, the more you recognize this pattern, the more you annotate every day your charts, the more you really put time to study your charts, the more this pattern will become familiar to you, and you will be able to recognize it. And the first time you'll say, oh, this is a long, I'm buying over here, all dips. And then you'll think, oh, wait over here. Let's say Greg, over here we're breaking out, but then we're failing this previous resistance 131. which is also a level of pre-market of interest. And we're rejecting this 131. So maybe we can have a short. So you start thinking like that. You don't think only, oh, we're above the open level, this is gonna push up. You know that you have the daily level. You know that you have over here a new heat map formed. You know that now we are rejecting for a second time that level. And now you start thinking, well, it's still like 932, 1532 over here. I can still have a fail and unwind because I know that that's a possibility of being a reversal pattern or UV reversal. And it fails. So try to look today, tomorrow, days after, how this pattern works, because this is an amazing pattern. You don't need to trade all morning. This pattern works in the first few minutes when you have earnings, when you have news, when you have like an open. So we always spoke about the V pattern. This is a reversal V pattern or reversal V. Try to trade it. First, test it, analyze it, and then look really how it works. Looking at the chart is simply this, okay? So this is 930. You see at 930 we have a push, which would be this first push, and then what? We have this fail over here. Where is the key level? This is your key level, which on your chart is this over here. Any questions, traders? Let me know if you have any questions. If it's clear for everybody, we can go on. So Greg is saying no thanks. I know, buddy, you know the setup, but there are also traders over here that they don't know the setup. Okay. Okay, let me see over here. So I have over here, Vic is asking me a question. Can you go over Meta? Okay, no trader ask if you have a question over here about Google. No time, T-Work, fine for them. Okay, traders, you can write over here if you would like. I cover some stock. They asked me right now to go Meta because today we have earnings. Anybody will, first of all, will trade this? Okay, let's start looking at Meta. So first of all, I'm gonna put up Bookmap. Last 3 hours. Meta is one of the best stocks that I can trade. It's gonna upload over here. Now, it really changed the way that Meta was trading when it was like, what, 3,000 bucks, 2,500 bucks before the split, and now. The price action is different, of course. There are traders who prefer Meta now. There are traders who used to prefer Meta when it was like, 10 times more than this price. Now this is Meta of this morning, okay? I wanna share with you one thing. Yesterday a trader asked me, Jay, how do you know when a level will bounce or not? Because, and I really go over here what he asked me. 1 second. Let me see. Okay, here we are. So the trader is asking me, Jay, how do you know there is any kind of filter that tells you that a heat map will be real or not? And I know what it means. like there's some kind of heat map liquidity. From that point you think, okay, this is going to hold for a bounce or a rejection, or no, it won't simply hold. Well, first of all, it really depends from stocks to stock, and then if I have to answer, no, there's no. Because sometimes you will see, let's say, Meta with 50,000 support that won't hold. Of course, there'll be a little bit of absorption or maybe a little bit of rejection or bounce, but it may not hold. And sometimes you'll see a 5,000 that will hold. It really depends on how it reacts to that price level, not really the amount. It's not that Tesla has that day 100K resistance on heat map, on Bookmap, and we know that that is a level that will have a rejection. No, it doesn't work like that. Always wait to see how it reacts. Okay, that's the first thing. The second thing over here, and let me put this up, traders, is in order to have, I would say, a good vision of what is going possibly to happen, you don't have only to look at Bookmap, but look Bookmap together with certain parameters. One, daily chart. Two, an hourly chart, which is my way to go. A 50-minute chart or a 5-minute chart. Okay, so 3 out of this: daily, hourly, and 50 minutes or 5 minutes. Then you start looking at these levels over here. For example, I'm pointing out, let's say, this, okay? Or I'm pointing out this, or I'm pointing out this, or I'm pointing out this. Look at which levels on your chart correspond. Let's say this is a major demand zone from a weekly chart or daily chart. Okay, of course this will be interesting. Next one, we're going to analyze now the price action. So we're going to stay over here, Meta. This is a weekly chart. So remember, today we're going to have earnings. Let's go back and check for the major levels of liquidity. Okay? You're going to help me do this. So we have, let's look for the major points from where we have the rejection or a bounce. I'm going to start with the ones near here. And the first one that I really like is this. This is my first level. Why this level over here? Well, very easy. We had the major rejection over here, so this level worked as a major supply. And then it worked like a bounce level. So demand, so supply over here, and then demand over here. And you can see again too that it worked over here as a supply. Now let's look if we have other levels. So where the price topped, right? And we have another one over here. There we go. This level was another key level of supply around 330, 329. So we had a major over here pop. Over here we have a major resistance. Now let's look if we have any levels below. Why I'm putting these levels over here? Because we're going to have over here earnings today, and I want to see on the chart what are the main possible levels from where I'm going to see a bounce or a rejection. Why this level over here? Because we can see over here we had a rejection, rejection, rejection. Over here we had a bounce play, exactly this point. Okay, so we have now the major levels on a weekly chart. When I check the daily, and the daily, I think they correspond pretty good. We can put another one, and this level will be exactly here. There we go. Why the level? Well, we have a gap fill over here, and we have over here the relative high. The others are all fine. So perfect levels. Now let's look and zoom in into a daily chart. And what we have over here? Well, first of all, we have an uptrend. So if we look over here, the long term, we have definitely an uptrend, right? Higher lows and higher highs. So in the long term, in the medium term, we're bullish. In the short term over here, we have the pullback, a little bit bearish. And now, where is the major support level? This 285, 290. Okay, good. Now I go to the hourly chart. And this is all the process that I want to do before earnings today. Okay? So really, study the lesson of today because it's in depth what I'm looking and how I trade earnings. Okay. Second thing over here, hourly chart. I cannot zoom more than this on hourly chart. Now I want to look over here at the hourly. And we have still some hours over here to the earnings. So first we have 2 p.m. for FOMC, but then earnings will be at 4 o'clock. So right now what I'm looking for, I'm gonna write over here. I'm gonna make the plays with different colors so that you can understand. The first one will be over here, a break of this level, a fail below, and a push over here. So a bear trap long, exactly like this. And we're gonna put over here plan A, okay? So we're gonna put over here plan A. Let's put this small. A little bit bigger. There we go. So this is what I'm looking. Often when we have these news or data or earnings, we can have one breakdown, so unwind, or we can have a breakdown, right away bear trap, reclaim of the previous support, it actually trapped the majority of here traders and then pushed upside. So the first one that I'm looking over here is a bear trap. Why I'm looking for a bear trap? Because the major trend, how is over here? Greg, how is the trend, guys? Is it short? Is it long? How is the trend? Matt, how is the trend? Exactly, the trend is bullish. Exactly. So I always like to stay in the direction of the main trend, first of all. But let's say that instead we break this level, so we actually fail. I'm gonna look for, I'm gonna change color over here. I'm gonna look for a fail, ideally a retest of that demand area now becoming supply, and I will call this the B setup. So we have two setups over here. If it dips and we have a bear trap, so over here we're gonna put A and we're gonna put the bear trap system or setup. And over here we're gonna call B the rejection setup. And this is really the main concept of looking if we open over here weak and we have these dips. Now, if it fails, to which point will it fail? This is a major for me demand zone over here. Okay, because the price had a rejection, bounce, bounce. So this level over here is my first level if the price will unwind. The second one that I'm looking at is here. So I'm gonna put over here again this TP1 and TP2. Okay, remember we still have some hours, so the levels could change. If instead we bounce, I'm gonna look for this level over here, TP1, and then TP2. This is what I'm looking at. We're gonna put this level here, also this. There we go. And level 2 we're gonna put over here. Okay, traders. This is what I'm looking for, a potential, being that we're going to have a bullish move today with the earnings or bearish. All right. So next one for now, I'm looking at, actually let's look at the price section over here on Meta 1 second. So we're gonna go into a 15-minute chart. I'm gonna screenshot also this over here for you traders. So we're gonna do this. Meta forecast earnings. Yeah, reading about FOMC, everybody, you could see today is waiting for a possible 25-point move. I don't know, but I'm only preparing both plans, both for longer and short. And this, first of all, looking over here at ES and NQ, and looking also at the big caps that we're usually trading. Okay. So why I say that? Because it's better not to have a bias and simply trade what the market is giving us. This is really what I prefer to do. Okay, let's look right now at Tesla. There we go. So this morning we are talking about the V pattern. First we spoke about the Google and we had a reverse V pattern or reverse V. Over here instead we got a V pattern. So the morning dips and then before the 10 minutes clock, so the 9:40 we have a breakout. Again, what can we see here? We see a level of support that is breached, this 262. We have the price that makes a double bottom. Price starts to jump, but at this point we still don't have a confirmation this will be a reversal, right? It's just like, let me zoom in. It's just like dipping, right? It broke over here and it came up. It broke over here, came up, but then eventually it came down, so it can still come down. What I'm looking again, remember, is the open level. I'm looking for this open level. If we reclaim it, and then we reclaim the main relative high, so the supply area 264, then the supply area, we have a retest, becomes a demand, and that over here, this is the smartest things to do. Then over here, this becomes your long play. So you can enter here, or you can enter here, but the confirmation, really where you think is gonna confirm over here. On a breakout, not really. On a red to green, not really. I mean, it finds over here a lot of momentum, that's good, but the confirmation will be breaking the supply area, dipping into that supply, now becomes a demand, and then pushes it upside. This is really the process that you have to do. Okay? This is the process that you will do. We will make a screenshot over here, and I'm gonna do this. So this, remember traders, is Tesla V pattern that we talk almost every week. Is that one of the best stock long morning pattern. And this is what you have to look on Bookmap. Along the way, and then I will answer over here, traders. Along the way, you can see that we have a lot of major supply areas. This. So I've seen traders that often they see this and they scale out at each level. or traders that they simply start tracing a trend line, one here, one here, one here. Well, look at the chart right now, and visually looking over here, where you don't see anymore those huge amount of buyers. Well, we have buyers over here. Look at those dots. We have buyers over here. Look at those dots. Buyers over here. And then over here, we see no more buyers. Look, where are these big dots that we used to have, right? So over here, this zone, there's no anymore any kind of big demand. And you see over here how many times we had to break a trend line, and it's still not backside. Price over here is like being pumped again, being held again. Only over here we have this distribution pattern, rejection, and then we start seeing sellers over here at this point. Okay, so this is the reason why often traders focus too much on a trend break and anything else, but this is the zone where simply we don't have any more huge buyers. Questions? All right, so let's see over here. An expectancy for the firms. Rena, which indicator you use? I will work, can you tell me? So over here today, I'm not really using too many indicators. It's just like using Bookmap. My strategy is formed by statistical play based on patterns that I backtest and tracked. The major point for me is that you learn today the price action. This is really, and how to read order flow. This is really what's important. Then indicators can help you to define this, a trend, a reversal, a bounce play, a setup. But right now, learn this price action and really the order flow. Let's review the last over here example. And look at this. This is exactly why Bookmap is useful, okay? So listen over here, guys. We have over here what? A crack, okay? A fail of a major support. You can see this liquidity. If it's red over here, it means that we had a lot of buyers placed on in this case, on the book. We broke this 265, whole rounded number. So a lot of traders will short over here. I don't do that. I don't short on the breakdown. I always want to see a rejection. What is a rejection? Rejection is when we break, we retest it, and this is a rejection. This is over here. So my point is that when you see something like this, don't follow the trend. Wait a second. Wait until we have this pullback here, and we start rejecting it. So this becomes your short. Of course, you can still have a stop, but a stop will be minimum. So you can trade over here using a stop. Gave a little bit of threshold over here, okay? Or like my friend says, bus proximity. So use this like 20 cents, 30 cents, maximum of proximity of threshold. And then you start looking for short over here, the rejection. So this is your fail of support, rejection play. And then you start looking at lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, until you have your target. So again, don't short weakness here. Wait for the price to break down, pull back and short. These are the best patterns you can trade. I had another one over here this morning, but for the long side, remember when we were looking at this. So let me over here to clear some stuff. Remove. Remove, 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 okay. Like this is a little bit better. Okay. So the first level, we had this supply from the morning 9:30. Okay, here. This level here. Major level of supply. So you don't buy essentially on a break of this, okay? You don't want to buy on a break of this. because it's going to be a fake out. So what I like to do personally is I wait for a pullback into this demand zone, and then I start buying the bounce. So this level over here, this level over here. So I wait that the price pulls back into this demand area. I'm just risking over here 30 cents in this case, below the 264, and then I'm taking these dips. Over here we have liquidity. Over here there's a big absorption, okay, when the price stalls into a level. And then I start looking again for those bounce play. And that's the way you have to do it. Don't buy on the breakout, wait for the major pullback, wait for that bounce play, and then take your long. All right? Any questions, traders? Let's see. Sorry about for the BTC, but I believe that the traders for Bookmap for the Bitcoin will go over that. Okay, last few minutes. If you have questions, we can cover them, or if you want to look at some stocks. Today is only pretty much stocks. Okay. All right. So again, traders, if you have questions, if you need help, reach out to me or Bookmap. You can write me at socials or website JTrader.co. We have a trading room where we screen share every day live. I have also a mentoring where I follow traders both over here into the trading room, or also in the trading academy over here in San Marino. So see you again next week. Take care, traders, and have a good day. Thank you very much.